Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, and we're here now at 6:45 p.m. Central Time, and this is May 1st. All right. Pretty soon, I'm going to say next week, I'm going to be able to be putting these out earlier. We are finishing up the artificial intelligence that edits all these, gets them ready, puts in the place cards for the offerings that we have in them, puts in everything, the titles, they go in it, posts it to YouTube, and once it's done, you'll be able to see it. So one of the things you want to do is be certain on YouTube that you check off that you want to follow this channel. Everything's going to start coming out earlier. This has been a huge project, costly, but without artificial intelligence, it couldn't have been done, and I'm amazed. I sit here sometimes an hour at a time watching how the code gets written by the AI. You literally are writing in plain English what you want it to do. It comes back and how it works. I'm fascinated by it. If I can do it, not me personally, but watching my crew, that's it. Now, believe me, I'm learning enough where I think I'm going to try a few things. All right. In the stock market, you know today was going to be about Meta and Microsoft. Tonight, the correction in the markets about getting now, this was Amazon and Apple, the two A's. And I looked at both of them and said, okay, I don't think their reports were that great. Obviously, you know, Amazon's got to worry about a lot. 16% of the sales, as I understand it, come from products that are made in China, you know, Chinese goods. 60% of their sellers, as I understand it, at some point sell something that was made in China. So that's a big part. Overall sales, I don't know, is it 6% of their overall sales? I don't know. But you've got to pay attention to that. It's not debilitating to them. They'll come out of it strong as can be. The people that can't do it from China, they'll do it from Vietnam or whoever when a deal is made. The good news today, and it added to the fuel today, was the fact that the Trump administration, and I'm applauding them, on different levels reached out to the Chinese. We should do that. They didn't create the tariff war. We, the United States, allowed all this to happen since World War II. Just think about it. That's the reality, all right? And now President Trump wants to address it. After him, there'll be another president that has to figure out how do they keep addressing it or they abandon it. We don't know what's going to happen. But that's then, this is now. And we're only in April, just ended April, now we're into May, and things are happening. We still don't have a trade deal with anyone. So I'm so tired of the promises. We're close. We're waiting for permission to tell you. It sort of gooses you up, and then the air comes out of it because you'd like to be able to say, we've made a deal. Here is the deal. Here's the structure of it, blah, blah. We know no more of that. Tomorrow morning, you're going to be dealing with the jobs report. Now, to me, I don't expect this report to have the impact a lot of other traders do. I'll explain why. You're looking for 133,000 jobs. The market has been anticipating all this tariff. It got Liberation Day in May. Now the impact of all this starts being seen May, June, July. That's where you're going to see what the impacts of this are. When do the shelves lighten up? You're going to see the impact of jobs as ships that should be coming from China aren't there. Because the goods, this is basically an embargo that's going on, so you're not going to get those. What happens to the trucking jobs? What happens to the warehouse jobs? What happens? These are the things you got to worry about. If you were to ask me what would be a shock number to me for tomorrow, it would be no new jobs, zero. But barring that, I expect the number. Now, it's low enough where you might get a surprise. Maybe it comes in 150, 160, and the market will say instantly, that's not as bad. I'd say under 100 takes the market down. That's the way that I'm going to look at it, all right? Not super bearish, but I look for the things to get worse over time. The jobless rate's expected at 4.2%. I'm surprised it's not jumping more. The average hourly earnings, they're looking for 3/10. And we get factory order data for March at 9 in the morning. We saw a bunch of that today, as you know, at the cost of prices paid and sold in factories. And it's not a pretty sight. It's ugly. And that's because it's beginning. The tariff war, as you know, is not going to be nice. Now, a lot of traders, and I'm watching them today on TV, you've still got to be buying gold. I heard all the reasons they're saying that. Banks, central banks will keep buying it, but central banks are always buying gold. Don't forget that. The inflation scenario, okay, how much of that is in the market at $3,200 to $3,500? Then you come to the stock market. The earnings report for the companies that have AI and they're monetized and they're bringing in money, they're up. That's why you were up today. Now, the companies that aren't monetized like that, what happens? Do they pull the market the other way? Do you honestly think you're going to take the Dow and other markets up to new highs right now? Because if you get bullish here, that's almost what you're saying. So I think it's a little early in the year to get that bullish. I'd like to see the impact of the tariffs. The market comes up, comes back down, not a crash, not a serious recession, a pullback. The tariffs start coming off and the market rallies into year end. It sounds too simple, so it probably won't go that way. On the energy market, we have OPEC meeting, I think it's the 5th. So today, the United States, via our president, signed another order putting secondary sanctions now on Iran. And basically what these sanctions do is they explain it. They're strategic ones, and what that means is if you buy, you being another foreign country, a company outside of America, if you, that country, in some manner buy Iranian oil or petrochemicals, the president can say we're not going to do business with that country. So China, Korea's, other countries that buy it, who knows who they're selling it to. The people that Iran's doing business with, I don't think North Korea does a lot of business with us. Russia doesn't do a heck of a lot of business with us. China used to. And if the president really wants to get to Iran, and I didn't say he has to yet, he's putting the teeth on to try to get them to stop their nuclear enrichment program. If he wants to, he then lets China keep buying and tells the Chinese banks they can't use the SWIFT system. There's a way to shut them out of that, and that creates a big problem. I am not saying he's going to do that, but it is in his hip pocket if he gets really pissed and wants to do it. He's already pissed at Iran. That's why these sanctions went on. There is no meeting this week. I think he realizes the Iranians are never going to give up their right to build a nuclear weapon. I think that's what they think they have to have. Their goal is to wipe out Israel. And with that thinking, he's not going to allow that. He's going to go after Russia shortly. You don't have to believe me on it, but if Russia and Ukraine, if this fighting keeps going this way, remember, he was going to end it in the first day of his term. Where's he at with that? Those are the things you think about. The dollar had a nice rally. Is it because the dollar's that much better, or was this a reflex rally in the market? I think it was a reflex rally off the 9,800 level, which is a big number on our unique price count system at Linn Associates. When you have an account with us, you get to see how we work with all this. QT Systems has this in their charting software. If you want to work with it, just go to our website and we'll give you a free trial to the QT so you can see how this works. It is fascinating. And I use it every time I do a special report. And I told you today I was going to do a special report. I didn't. I'm going to do it tomorrow. Why not get to see the jobs report? I started thinking about that and going, why not just wait? I'll have so much more to say. Okay. So in the S&P, we're getting a rally. As I told you yesterday, I can make an argument that maybe you get to the 5,700 level over time. I have a hard time thinking you're going up for new highs at this point. I already gave you a scenario where I can expect that late in the year if things go the way a make-believe world. Tariffs come on, then they start coming off quick, and the world changes very fast. When you just look at what the market has done, I have pointed out to you all week that this is a resistance zone right here. And you stuck your head into it today, and now the market's just sort of sitting right there. The trend is up as you've got a pattern. Just take the name off the chart. The pattern is higher lows, higher highs, and until you take out the low right here of 54, 55 and a quarter, the trend is up. The support of the market's all the way back at 54.23. So to get there, if the market decides to break down, you break the uptrend. You go back into, at the minimum, a neutral pattern. And where do you think the Bollinger Band is on this chart? Just above the market. So I can make that argument. This area is your resistance. We'll see what the jobs do tomorrow. Can they kick it there? When we get to the NASDAQ, by the way, let me come back to this one thing. You did embed. So you have the bullish embedded reading, and the market, when it reopened, didn't lose it. So the traders tomorrow, I think when they see the report, I wouldn't be surprised if there's buying as long as the red line's not under the 79 level. I want to go on record saying that. I see the same thing in the NASDAQ. You embedded. That's bullish. I see that buying. Not so in the Dow. I still see big resistance there, and you can't embed there. And did you do it in the Russell? Let's take a look. You can't count tonight because we don't know where the market's going to close tomorrow. But both numbers were over 80 today. They were over 80 the day before and 80 the day before that. So 3 of the 4 indices are at that point. We're on a break in the market. I would expect to see pro-buying, and they'll dump, in my opinion, their long positions if the red numbers get under the 79 level and especially close there. But once you're under the 80 level, I think the buy orders get pulled. In the DAX, I don't know that you have to go any higher here. The market made its highest high of the move, and it sort of ran out of steam. So I'd be a bit cautious right now. You do have an embedded reading, sort of like everything else. I'd wait and see how the market does on the break tomorrow, if there is one, and that's where I think the traders will buy. Again, if you get the red line to close under 79, abandon ship on it. In the 10-year note, you went up to the upper Bollinger Band and ran into a brick wall. I mean, boom, you stopped the rally. You went up to the brick wall in the 2-year notes. You stopped the rally. Obviously, everybody's going to look and see what tomorrow's going to hold. And unlike embedded readings, you're just plain overbought in these 2 charts, both the 10 and the 2-year. As we look at the dollar index, this rally began here, and it really began when you lost, excuse me, allergy still, when you lost a bearish embedded reading. And when that happened, I had a goal to go to the 18-day average. I had to say it over and over and over here until you took out that low, one of the two. You didn't take that out. You're now at the average. I call this a bear market rally. Tomorrow we'll set up what the trend could be. The break in the euro did not come from losing the embedded reading. It just broke on its own. And in the pound, today was the day, by day's end, that you lost the bullish reading, and it's following through tonight. So I expect before you get up here that price and the 18-day average at 132 are going to come together, all right? In Bitcoin, follow through was nice today and held. You have the bullish embedded reading. Now I think traders will look at the 100-day average as support, and they'll bail if you lose the embedded reading. So pullbacks to that is where I'd expect to see the pros try to buy the market. In the crude, what do you do when you hit the Bollinger Band and you're not embedded? In unison, ta-da, cover shorts. That doesn't mean it's a trend change, but that's where I think that occurred. Same thing in the WTI oil. When we look at Rebob, didn't make it that low. It's just hanging right here and fighting a big battle in this market right at that key number. So I think you want to pay attention to that number as to what it means. And in that gas, do you recall I said when you lost the bearish embedded reading, I thought we'd go up to at least the 200-day average. And if you wanted to give it gravy, and I said that day after day this week, go to the 18. You've done that. Short-term trend is up now in the market. You'd have to go back under the 326 level to negate that. So I'm expecting to see the buyers come in the 340, 338 level. It's still a lot of money to risk in this market, but that is where the trend of the market is, in my opinion. If it got power to run, I'd be looking up here. I wrote about how much natural gas Europe is buying from the U.S. They have gone 50% higher in their purchases in the first 4 months of the year from where they were before. You think they're trying to get the president's attention and showing what they're capable of doing? You can count on it. That's why they're doing it. There's other sources. That's why they're buying that. Nah, that's my opinion. And their reserves there, they're 33% under where they were a year ago. So there's plenty of space for them to fill up. We can sell that to them. Just bringing this up to you. It's important. This is what we put in our newsletter and so on as I'm writing it during the day to give you these facts. Now, if you trade future stocks, spiders, one of the things we do is we put out in the morning a different type of video. It looks like this with the charts. I'm not in it. You're lucky with that. And I'm talking right into the chart action as it's taking place and telling you what I think, where the buys, where the sells come in, what it does. I'm going to be right, I'm going to be wrong, but I think at the end of the year, I try to be way more right than I am wrong. That's the goal, and that's what you try to do. It also includes free, my special reports, because I do charge, after you've seen them a couple of times, you're going to pay $3.50 for each one. It's certainly worth it, but you can get a subscription and get it all included. Just go to iraepstein.com research. If you move your cursor up here, you'll see, in fact, you'll just see a circle with an eye in it. If you're watching this on YouTube, give it a click. It takes you to the bottom of your YouTube page. That's where you click on for the link now and go. That's a new feature that YouTube is putting out. In the meantime, I'm Ira Epstein. Have a great evening. I'll see you in the spider and the metal videos tonight if you watch those. Otherwise, first thing in the morning, and that's where I'll review what the jobs report looks like. You take care.